Welcome back to the portfolio, everyone. Today we're going over how Walmart is finally going after big bad Amazon. Walmart announced today their new subscription service is going to be coming out over the next couple months called Walmart Plus. And this service is going to launch within the next couple months and is going to directly compete with Amazon Prime. So of course we all know Amazon, the big e-commerce giant, has a feature where you can pay a subscription fee around $120 a year for Amazon Prime, which gives you 1 to 2 day delivery on a lot of Amazon's items. As well, you get a lot of other perks like Amazon Video and as well as other products that come along with that subscription service. So Walmart Plus is going to be Amazon's biggest competitor, and Walmart, the retail giant, is planning to launch it very soon. And they're actually going to send it out at a lower price to compete with Amazon Prime. They're going to reportedly have it out at $98 a year. So today we're going to go over what this means for Walmart. We're going to talk a little bit about Walmart Plus, and then we're going to go over Walmart overall as a company. We're going to take a look at the stock, do a quick analysis to determine if now is a good time to buy Walmart. If Walmart Plus is coming out in the next few months, if we really think this is going to compete with Amazon and really grow Walmart's revenue and net income into the future, then maybe this is the time to jump into Walmart before we really see that revenue happen. And maybe we can see some nice growth through the dividend and share price appreciation over the next couple of years if Walmart Plus can really be a strong, sustainable new form of business for the retail giant. So we're going to jump right into it, but I am going to ask you to please like and subscribe. I am the Gen Z investor, and every single day I come out with new videos on different stocks you can buy, overall stock market performance, as well as big news headlines and updates throughout the stock market like we're going to talk about today from Walmart. So we're going to talk about what Walmart Plus is. So of course it's a new subscription service that's going to be coming out over next month and the next couple months from Walmart. And what it's going to do is it's going to compete with Amazon Prime. It will cost $98 a year and include some perks like same-day delivery of groceries, discount at Walmart gas stations, and early access to some deals. And of course, this is all reported. We're waiting to see the true features when it officially launches coming soon. But those are some of the first things. So of course, you know when you get Amazon Prime, you get a ton of other perks as well as same-day or 2-day delivery. You get Amazon Video as well as a lot of other features and good benefits from owning that Amazon Prime membership. So Walmart Plus is going to be interesting because we have to see what features Walmart's going to bring to us. Like, what are they going to do? What are they going to put on the table to compete with Amazon Prime? Walmart doesn't have their own streaming service. We don't know what's going to come out soon. But of course, if you can get same-day delivery from groceries, that will be a very nice perk. And we'll see what's going to happen. Maybe Walmart Plus is going to maybe take some customers off the Amazon platform, bring them back to their more, loyal customer base back to Walmart and take them away from the other e-commerce giants. We'll have to see. So that's what Walmart Plus is, their new subscription service coming out in the next couple months. Of course, we're going to see how it develops, how if customers adapt to it, and if customers really enjoy the service. And of course, we'll make a future video updating on that when we get more data about what's really going to happen. So now we're going to jump into Walmart's actual stock. We're going to go over the current share price, the dividend, how safe the dividend, the company's valuation, and of course, we're going to take a look at the financial statements. We'll do a quick overview and analysis to determine if we should jump in now. If we really believe Walmart Plus is going to help Walmart grow into the future, maybe now is the time to buy so we can get in before that share price is adapted to the new revenues through Walmart Plus. So we're going to take a first look at Walmart stock. So ticker symbol WMT, Walmart, currently trading at $124 a share. We're taking a look at the 5-year chart here. You can see a beautiful up 72% on the 5-year share price chart, with a huge market cap at around $360 billion. So before we jump to the financials, we're going to just take a quick look at how they performed over the past year. Because with the March lows, you can see here, the stock did crash in the March lows, but has fully recovered and reached new all-time highs, currently trading at around $124 a share, and the 52-week high is at around $133 a share. With regard to Walmart's dividend, they pay a 1.7% dividend, so a little bit on the low side, but nothing too minimal, with a very safe, very low 43% payout ratio. So a lot of room for Walmart to continue to invest in their business as well as grow that dividend long into the future. With a 5-year dividend growth rate of only 2%, nothing impressive there whatsoever. Of course, that dividend growth rate basically just keeps your dividend growing at the rate of inflation, so you aren't losing money to inflation every year, but you aren't really getting a raise past inflation. And their dividend growth streak is at 47 years. And of course, with such a low payout ratio and that low dividend growth rate, you can tell for sure Walmart is going to reach that next 3 years of dividend growth, and they will become a dividend king very soon. With regard to that dividend, how safe it is ranked safe with a dividend safety score of 79. And one thing I do find Walmart attractive is they have extremely low beta of 0.53, so the stock is not as volatile as the overall market, and having a low beta of some stocks within your portfolio kind of reduces overall portfolio volatility and may make people have greater ease of mind as they don't see their portfolio fluctuate as much as the overall market. Now we're going to take a quick look at how Walmart's performed compared to the overall market, because once again, of course, when we're picking individual companies, we're trying to outperform the S&P. If we take a look here on the 7-day return, Walmart is up 4%. On the 1-year chart, they are up over 7%. What's really important here is how Walmart performed over the past 5 years compared to the overall market. So you can see here, Walmart performed 69% growth in share price over the past 5 years compared to the overall market growth of 45%. And if we include dividends, you can see Walmart outperformed the market when they returned a total of 90% over the past 5 years. Meanwhile, the overall market has only brought in a 63% return over the past 5 years. So Walmart's done a good job of beating the overall market over the past 5 years. And of course, if Walmart Plus can gain some traction, hopefully they'll be able to continue to outperform the market moving forward. With regard to valuation, Simply Wall Street values Walmart actually undervalued right now by about 12%. They have a fair value per Walmart share at around $141 a share, with the current price at $124.44, represents a 12% undervalued representation in share price. Of course, every single website and every single valuation metric does alter this results, but I do like how Simply Wall Street calculates it. It is showing the 12% undervalued, just makes it a little bit interesting, something to be aware of. We're going to jump into the financial statements. Very important to always take a look at when you're researching individual companies. The first one we're going to take a look at for Walmart is the income statement. And what we're trying to make sure is that Walmart grows revenue year over year. That's one thing you want to make sure is these companies are continuing to generate more and more income each and every year. And how do you generate more income? You reduce costs or you increase revenue. So you take a look here, over the past 5 years, you can see Walmart has done a good job each and every year of growing revenue. So $500 billion in 2018 up to $514, $523, and the trailing 12 months they've generated a massive $534 billion in total revenue. Absolutely incredible. With regard to net income, their net income is on an upward trend right now, which is nice to see. Trailing 12 months they've generated around $15 billion of net income. With regard to the balance sheet, Walmart does not have the strongest balance sheet out there. The balance sheet is somewhat a little bit of weak right now, not the best. I do believe they should try to improve it moving forward. If we take a look at their total current assets, they have around $61.8 billion of total current assets. Meanwhile, their total current liabilities are around $78 billion. So they do not have enough total current assets to cover those current liabilities, which is not good to see. You really want to make sure companies have a current ratio of at least 1 to ensure that they have the assets on hand within the next 12 months to pay off all their liabilities. Does this really trouble me for Walmart? Absolutely not. I do not think Walmart's going anywhere anytime soon. I'm very certain that they will be able to pay off all these current liabilities even though they don't have their total assets on hand. They are a cash cow machine. They will be able to generate revenue and net income very safely over the next 12 months, and I do believe they are not in any financial difficulty with regard to their current ratio right now. But of course, we do like to see them grow and improve that current ratio over the next maybe 12 to 24 months. With regard to total assets, you can see they have $236 billion of total assets. Meanwhile, total liabilities are around $154 billion. So they do have enough total assets to cover all those total liabilities. That ratio is a little bit better. Another thing we want to make sure is Walmart is growing equity year over year. And that's another thing that is a little bit on the downtrend, which we do not want to see. Walmart's actually decreasing total equity over the past 5 years, which is not the best. We do want to see companies that are growing equity year over year. With regard to cash flows, Walmart has growing cash flows year over year. You can see net cash provided from operations is slightly growing year over year. On the past 2 years, it is somewhat flat, but again, it has rebounded from the one low. Investing activities, Walmart has been investing around $9 billion in the trailing 12 months, and you can see most of that went into investments in property, plant, and equipment. Net cash used for financing, you can see they paid out around $6 billion in dividend. They paid off a little bit of their debt, and they did purchase back some common shares. And overall, they are free cash flow positive, generating around $18 billion. So you see from this chart on the side here, they are growing revenue slightly year over year, and earnings are on an upward trend. So overall, Walmart's financial statements are not the strongest. Their current ratio could be improved. They could try to generate higher net income by improving their profit margins. And of course, their cash flow statement could be a bit better with regard to how they're spending their money. But of course, Walmart is a beast. They're one of the largest retailers in the world. I do not see them going out of business anytime soon. And just with the type of business they operate, where they are considered like a low-cost retailer, a value retailer, where they kind of consume everyday consumer shops at Walmart because they like all the products you ever need are always located within your neighborhood Walmart. And because Walmart is so spread out across the entire United States and Canada, I do believe that their operations are continue to be strong moving forward. I understand that the shift to digital is going to happen very soon, as we're already living through that right now. But I do believe Walmart has a little bit of an edge, and they will be able to maintain and continue to grow even during this digital transformation. And of course, that's why they have introduced Walmart Plus, to be that change to compete with the big boy Amazon and hopefully to steal back some market share and compete in the new digital market. So I do appreciate you for tuning in. That was my update on Walmart Plus, and I will see you in tomorrow's video.